Ladies and gentlemen, apes and apettes, welcome back to the channel after a very explosive Q1 2023 that sent the NASDAQ up 24% from the lows in early January to where we sit now, sent the S&P up almost 9%. Where do we go to start the first week of Q2? Well, we got a lot of economic data that will be coming out this week, and that will help solidify some of this next move that we could make in the markets. At the same time, AMC has a lot going. Amazon potential buyouts, court dates on April 27th, the reverse stock split, all of this can be very confusing. We're going to look at this on a micro basis and talk about what we expect to happen in this upcoming week with AMC stock and something that I see a lot of potential opportunity in over the next couple of months. Some of those longer dated AMC options. Now, do not listen to me. I'm not a financial advisor. Do what you want to do. It is your money. Do not gamble your money, especially money that you need for bills, vacations, whatever else you need it for, right? Pretty self-explanatory. Now, with that disclaimer out of the way, let's get into this video. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section, all of that good stuff. But hey, let's not waste your time too much. Let's get into it. So, first things first, not too much happened over the weekend with AMC. Let's acknowledge that first and foremost. We didn't get any new updates from the Amazon buyout. We didn't get any new updates from this court date that's going to be taking place on April 27th. And I bring those two things up specifically because those are going to be the two things that are really going to drive AMC from here, at least until April 27th. Now, in the next video, coming out today around 4 or 5 o'clock, we're going to talk about specifically what I expect to happen from now until April 27th, what I expect to happen after April 27th. And I think a lot of people are confused on what to expect. So I'm going to give you guys my opinions in the next video. But here, as far as this week, any new updates on those two things will be what ultimately drives AMC. As well as that, maybe if the markets see a bigger move to the upside or a sharp drop to the downside, that could also give you some moves in AMC. That is very possible. Now, we'll talk about the ranges once we get to the technicals. But really, the first thing that I want to get into is the economic data, because right now, the markets are stuck between really a rock and a hard place. The markets are expecting 4 rate cuts by the end of 2023. The only way that happens is if the Fed does defeat inflation, then you get rate cuts. Or if the economy defeats inflation, meaning that you go into a downturn, you go into a slowdown, you go into a recession, inflation will go away if you go into a recession, but that's the only other way you get rate cuts. So if inflation comes down and economic data and activity can hold up, that's your Goldilocks scenario. That's the soft landing. That's the only way you get a soft landing. Now, if the data starts to point towards inflation is remaining very elevated and the economy is slipping further into recessionary territory, well, that's where you get your hard landing scenario. And any economic data that points you in one direction or the other is going to start to be even more important than Fed policy. Once we get the next Fed meeting coming on May 3rd, likely our last rate hike, it's all going to be about economic activity. It's all going to be about the data and all going to be about earnings. And earnings will be the big story, not this week, but starting next week. And banks kick off earnings season. And what a hell of a sector to kick off Q1 earnings with none other than the banks. I think that's very ironic. Now, let's get into the economic data outlook for tomorrow. So tomorrow you're going to get at 10 o'clock in the morning ISM manufacturing PMI. So this is another kind of gauge of inflation. It can be a gauge of economic activity as well. So you want to see this number come in higher. If it comes in lower, that's bad. Technically under 50 is contractionary. You got in the month of February a 47.7 reading in contractionary territory. You are expecting a 49 reading on the ISM manufacturing PMI. As well as that, you get the ISM manufacturing employment for March, consumer spending month, or construction spending month over month for February as well. ISM manufacturing prices and ISM manufacturing new orders that come out tomorrow at 10 o'clock in the morning as well. On top of that, you're going to get a 3-month bond auction and a 6-month bond auction at 11:30. You want to watch what these yields are because that will tell you demand. If these yields start to fall, that means people are rushing towards safety, and that could actually turn into a bad thing. Lately, technology has loved yields going down, but why are yields going down? It's not because inflation is rolling off of a cliff. It's not. That's not the reality. The yields are falling because of fears of a recession and the pending economic potential collapse that we could see. So I think there's a big difference on why yields are falling. So you want to watch these bond auctions really throughout this week, but you're going to get those shorter dated bond auctions, which will be, believe it or not, more important than those 10 or 20-year bond auctions, because 3-6 months out, what's Fed policy going to be like? You can get a huge implication of that based off of how investors feel about owning these bonds and what percentage they want to own these bonds at. So if that sounds confusing, don't make it so confusing. It's really not. Just go read or listen to what I just said. We broke it down pretty well there, and really try to understand how interest rates correlate with how investors are feeling about the economy. I think that is very important for you guys to know, not just for right now, right here and right now, but for your whole investing career. Now, Fed Cook also speaks at 4:15 p.m. Coming on Monday. Any Fed speakers from here will also be very important, but that's going to do it for Monday. For Tuesday, you're going to have the JOLTS job openings for February. You are expecting 10.8 million job openings. Last month's reading was 10.82 million job openings. So you're expecting that to go down by a little bit, but not all too much. Factory orders month over month for January, actually. It was negative 1.6%. You're expecting a negative 0.6% this time around as well. So slower economic activity. You want to take note of these things because that's ultimately what helps lead you into a recession. And then you get JOLTS job quits as well for February. You're expecting 3.8 million. Last month's reading was 3.884 million. So pretty close range there. Fed Cook again speaks at 1:30 p.m. on Tuesday. On Wednesday, you're going to get some bond auctions as well. And then the balance of trade coming out at 8:30 in the morning. This does not tend to move the markets. We've been negative with the balance of trade for basically forever. It's been a long time in recent history. You really have not been positive at all. Doesn't tend to be a major event. ISM non-manufacturing PMI for March, that is expected to come out at 54. And last month's reading for February was 55.1. Anything over 50 technically is a good thing as far as manufacturing is concerned. And this is non-manufacturing PMI, so you definitely want to watch out for that one. It's expected to be a high volatility catalyst coming out at 10 o'clock in the morning on Wednesday. Some oil data that comes out, nothing else too crazy throughout the afternoon. Thursday, you're going to get the unemployment rate for Canada coming out at 8:30 in the morning. Believe it or not, we're so closely related to Canada. I mean, we used to share an open border. It can be important as a leading indicator of what our unemployment rate could look like coming on Friday. So coming the next day, we're going to get our unemployment rate as well. And that is going to come out 8:30 in the morning for the unemployment rate for the month of February. That came in at 3.6%. You are expecting March's unemployment rate to remain at 3.6%. You're not expecting that to move at all. And the non-farm payrolls for the month of February, that came out at 311,000. You are expecting for the month of February to come in at about 238,000. So a slowdown in the pace of job ads, but still not even close to going negative. You're not close to even seeing the unemployment rate going higher or people actually losing their jobs in a big way. So pay attention to that. As well as that, you're going to get the other data points that come along with this: participation rate, average hourly earnings year over year, month over month, government payrolls, average weekly hours, manufacturing payrolls, and non-farm payrolls private. So that's going to be the biggest data point coming out on Friday, but these other data points as well leading into Friday will also be very important. And I wish I could forecast exactly how these things are going to go, but unfortunately I cannot. Now, depending how these data points do come out, and CPI, not this week, but the following week, will all play a role to what side of the pendulum we start to swing to. Do we start to expect a 25 basis point rate hike, or do we continue to expect a pause? It's really went back and forth over the last couple of days of last week. You're currently sitting at a 48.4% chance or probability of getting a 25 basis point rate hike, a 51.6% chance of the Fed pausing. So it's neck and neck right here, and I don't really think this is going to be as important if you get a 25 basis point rate hike or a pause. In the grand scope of things, the economic data will start to be the main thing people are going to pay attention to. And on top of that, company earnings that will really start to kick into gear as well next week. But something to definitely pay attention to. Can give you some pretty big intraday moves depending how those probabilities start to evolve as well. Now, as far as AMC, let's get right into the meat and bones of the data and what is going on here. AMC stock currently sitting at $5.04 per share. The live short interest of free float sitting at about 25%, 129 million shares that are currently sold short, with a cost to borrow average of 409%, cost to borrow max of 454.39%, and cost to borrow minimum at 322.5%. Cost to borrow numbers from Interactive Brokers currently has about 180.3% cost to borrow rate, with about 10,000 shares that are currently available to be lent out. So some very high numbers you continue to see with these cost to borrow rates. And I think that tells you a lot about the volatility that we can expect from now until April 27th. And then even after April 27th, that they're pricing something big into the cost to borrow rates with AMC stock. And whenever you have seen those cost to borrow rates spike like this, you have seen rallies that come. Maybe it's not instantaneously, but they eventually do come days or weeks down the line. As far as the overall option chain for expiration of April 6th, you got 53.5% of the total open interest held to the call side, 46.5% of the open interest held to the put side. So I do think that is pretty interesting. Now, if you do head out to one of the next big option expirations that we have on AMC for April 21st, 2023, that's where things get a little bit more gloomy, doomy and gloomy. For the calls, the open interest is 33.5%. Puts open interest is 66.5%. I think that's where ultimately could set us up for some opportunity here. When everyone is so negative, usually not the time you also want to be negative. Very rarely is everyone right. Think about that in context of all the crashes that we have seen really in the history of the stock market. It wasn't televised and forecast by everyone. So this makes sense even why the markets are rallying right here to subsequently come down in the next following months. Once everyone gets so bullish on the markets, it gets stupid. And that's kind of where you're at after the NASDAQ has rallied from trough to peak in Q1, 24%. Can't stop, won't stop. People are buying technology, baby. Now, there is that. Like I said, there was no specific news that came out over this weekend on AMC. Literally nothing, so there's nothing to report to you guys on that front. As far as the actual option activity numbers from Stonko Tracker, 27,000 calls currently in the money, 53,000 calls out of the money for this upcoming Friday, 10,000 puts that are in the money, and then out of the money puts sitting at 59,000. So you are getting some level of option activity, but not nearly to the same extent that we have seen in weeks prior. And it's typically these lower option weeks, right? Lower option expiration weeks that you do tend to see the bigger rallies in AMC stock, because there's a lot more room for the stock to rally when there's not hundreds of thousands of contracts that are already shorted or being actively hedged for, right? So We've seen that happen time and time again. Now, as far as AMC and a price prediction, I bet this is a big shocker to everyone out there. I don't expect AMC to move around all too much this week, and really for a while here, unless we get more rumors and a confirmation that Amazon is actually putting a bid in to acquire AMC, which I don't see as likely right now. I think they at least want to get through the court situation April 27th. I don't really expect the stock to go higher than 550 or to go lower than 450. I expect to be in this very tight range, under the 50-day moving average and above our prior resistance, which has since turned into support at $4.50 per share. And I think this is where really you could be set up for a massive opportunity, especially with the longer dated options. No, I don't want to buy any options that expire over the next couple of months, but I do think the risk premium looks very attractive considering the rallies that we could get out of AMC for some of those 2024, June 2024 options or the 2025 options. You're getting them at the cheapest levels that you can in a very long time when there's so much uncertainty and volatility and risk for the short sellers. That seems like the most logical trade. Now, obviously, don't go out and listen to me or don't go out and sell your AMC stock. You want to be an equity holder above all else. But I think a good way to kind of double down on your positioning right now could be through those longer dated options. And again, I'm not a financial advisor. AMC could go to zero. You get the spiel here. I'm not the financial advisor in the room, at least not yet. But I think that makes some sense, and I think it's worth you guys looking into and digging into for yourselves if that does interest you as well, guys. So that is going to do it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.